Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is hating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it. Yeah, in the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Late the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game. Yeah, ayy. All I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners Dale and Cliff back in the saddle again, guys. Welcome to another edition of Real Estate Friday Live, man. Cliff, what's going on, baby? How you doing? Big time.
Man, doing good, man. Another good week.
Yeah.
Back at it again.
Yeah. What's up, y'all? We got folk watching. What's up, Destiny? How you doing, baby? What's going on? Good to see you, man. Good to see you. You know, Cliff, I gotta ask every single time, did we get the bag?
Yes, sir. Every week.
Every week we got the bag, y'all. We do, guys. We always get the bag, okay? Every Friday, your diploma is the check, okay? Damn this paper that go on your wall. Show me the check or the deposit. That is your diploma. I'm gonna make a shirt for that, Cliff. Called your deposit is your check. Your diploma is your check. That's what it is, Doc. But yeah, man. Everybody doing well? Family doing well?
Yeah, man. Blessed. Very blessed, man.
Good. Mine is as well. Guys, if you're on any platform at all, you're going to want to share this one because we're talking about a topic that deals with cash flow. And cash flow is the most powerful word in business. But you know what we do every single Friday? We talk about the current market analysis. And guys, I want to point toward the regional banks, guys. The regional banks are in some trouble. And there was a report that came on CNBC that talked about this. And let's dive into what's going on there, guys. And then we can kind of reason together and see what's going on. And then we're going to get into our topic today. All right. So let's see what's going on, y'all, and see what's going down. All right. Here we go. Let's get it in.
About banks and the broader market is Unlimited co-founder and CEO Bob Elliott. I'm getting used to Friday, Bob. I like having you here. It's usually rainy here as well. We got to fix that.
Today.
It is. So Leslie mentioned we're at these lows on the KRE since May. We're also, I think, at a low for the NASDAQ since May. What to make of all that?
Well, I think when you look at the banks, we are starting to see some concerns that are emerging, not so much for the big banks, not so much for the small banks, but sort of those regionals stuck in the middle are starting to see some pressure. They still have a little too much duration on their balance sheet. They're still seeing, obviously, some hits as a result of the bond sell-off. These are the sorts of things that are not quite big enough to be a big deal to the Fed to cause them to pause or hesitate in terms of keeping monetary policy tight as it is. But it is enough to obviously scare shareholders in terms of what the forward-looking picture looks like.
Okay, so bigger.
So Cliff, why wouldn't a regional bank trouble issue concern the Fed? He just said it concerned investors, right? Investors are really behind the Fed because what actually happens is we're the ones that actually write the check as the ones being the citizens. Why wouldn't a regional bank situation actually affect the Fed in your opinion?
They don't do enough business.
They
don't do enough. The Fed's big. The Fed's thinking nationally. So when they see a small bank, that don't even hit their radar.
Yeah. Now, to me, that's concerning because of the fact that yes, they're not part of the big five banks, so to speak, but they are in the banking system, and there's a lot of depositors or borrowers for those banks. So, in my opinion, it's one that's a really good steward should be concerned about the big boys and the small boys, because if the small boys begin to fail, what's going to happen? The big boys have to come and buy them, right?
Right.
So, to me, that's concerning. But go ahead.
But they want that. I mean, I'm not gonna say they necessarily want that, but that's
Oh,
that's what you're incentivizing, right?
okay.
Is the fact that the regional banks can't compete. So what do you think's going to happen?
Well, no, they can't compete. That's for sure. Because you're looking at regional bank maybe a hundred, probably 300 to $1 billion, maybe $2 billion in assets under management or AUM. You're looking at JP Morgan Chase. You're looking at trillions, trillions. Deutsche Bank trillions. You're looking at these big boys, Citibank trillions. So yeah, I see that. But if there's a large amount of regional banks that begin to kind of get shaky, then what's going to happen is I see that could be concerning. And so for the Fed, who's a steward of fiscal policy in concert with the Congress, if they're not concerned about this, I got a problem with that.
Yeah. Well, hey, okay, let's put it this way. When's the
Okay,
last time we saw major banks fail? This we had it with SVB, right?
sure,
The Silicon Valley Bank, they
yeah,
failed.
yeah,
We had another one with Citizens Bank looking
yeah,
like it was about to, right?
yeah,
The Fed kept going because that shows you. Now let's replace that. Let's say it's not Citizens or none or First Republic or
sure,
SVB. If the
sure,
name was Chase or Bank of America,
different.
you see what
Yeah,
I'm saying?
it's different. I'm rocking with you, so I'm agreeing with you there. My thing
Right.
is this here is yes, SVB failed, but then you had to actually had the Fed violate its own rules to bail it out. So stewardship is not even a principle that the Fed actually operates by. Number one, because the partner Congress and the executive branch won't stop printing, and number two,
Right.
to be honest with you, they got to bail everybody out. The FDIC is almost broke. It's almost broke.
The FDIC is a joke at this
Yeah,
point. They made it a joke,
they did.
unfortunately.
They
You know,
did.
when they said that you have up to so much that's insured, and
Yeah,
then more than that goes bankrupt, and you're like,
yeah,
oh, whatever, we gonna cover it.
yeah.
So we making it up as we go. That's
Just
it.
make, just making it up, guys. That's why when Cliff said in the previous kind of move podcast, it's a smoke and mirror game. You better master that game, smoke and mirror game, because those that actually master the most smoke and mirror game, not in a nefarious way, but in a healthy, constructive way, will win. Because that's how the banks are doing, smoke and mirrors. Would you agree, Cliff?
Oh yeah, the banks, man, they playing a different game. When you got that kind of money, and then you also have the ability to create money out of nothing. I
Yeah,
mean,
out of
can't,
nothing. I mean, what we can't do with that, man. It's like if things go bad, I'm just print some more money, and that's bad for our kids. But don't care about that at all. They're trying to control the mentality of the consumer, and so that was what I wanted to hit on real fast, guys. Is the regional bank trouble, guys? Watch the regional bank. What are regional banks? And I don't know in Texas you have Veritex Community Bank, Regions Bank. You have really Comerica Bank is a regional bank. They are banks that are just below the Power Fives. That makes some
right,
sense. You know what I'm
right.
saying? So just watch out, guys, for those regional banks. All right, guys. So let's dive into this real quickly, guys. Cliff, what you just heard, man. Where is the economy going, man? We actually heard, of course, they finally came out this week, which we already knew. Interest rates are at 8%, 30-year fix. I've even seen some 40-year mortgages. 40-year mortgages. I've seen that, guys, right? I've seen 100% financing, a first and second lien position, so to
Oh
speak,
yeah. Hmm.
lowering a credit score requirements. Do you see the smoke and mirrors game, right? You see that as well. And so when it comes to a FHA loan, the government is ensuring that, but a conventional loan, 5% or above, is more riskier for the banks. So their rates are between 9 to 12% for real. So, Cliff, based on those facts, where do you think the economy is going from an appraiser and investing standpoint?
Man, it's a unique situation. So I would say at this point, the economy is just stagnating. It's just
It
going
is.
sideways.
It is.
And it's not going to move until they get a cut. I mean,
Mm,
that's the only thing I see because I mean, too much of the real estate. I mean, you just made land more expensive. Earth.
You did.
You made
Yes.
Earth more. You know what I'm saying? So
Yes.
until you make it less expensive,
Yeah.
everybody has to adjust. What you were going to sell for changes, what
Yes.
you're going to buy for changes, the
That's correct.
rehab because
That's correct.
inflation went up. So, you
Yeah.
know,
Go ahead. Go ahead. Go ahead.
but I still think the Fed's going to cut next year. They have to.
But if they cut and the government still prints, the natural consequence of that thing is hyperinflation.
Well, so man, and this is what
Mm.
I've been saying the whole time. The way how I've been saying they've been measuring wrong, right?
Okay.
I've been
Okay.
saying that for a minute.
Okay.
And there's more people starting to come on board with that way of thinking. Because if you look at the way they measure inflation,
Yeah.
a large percentage of it is based off rent equivalent.
Agree.
Well, if you adjust the lag
Okay.
to current prices,
All right. All right.
inflation drops below 2%.
But why is even 2% even a goal? Because all they're going to do is just change the definition again to get down to the point. It's a small marriage game. It's BS.
Why not one? I don't.
It don't make no damn sense. It don't make no sense. 2%. What the? Huh? That's why I said this. Man, marketing guys goes a long way. Trillions of dollars are invested in marketing to control how you think.
Right, because it don't make sense that they're so strong on this 2% when you go, okay, has inflation ever gone above 2% in the last, let's say, 20, 30 years? Yeah, multiple times.
Yes.
Did they raise rates then? Nope.
Yes.
Nope.
Nope.
They just said, oh, it's a little inflation year. It went from 2.6 to 3.2, and they didn't do nothing.
But now you have a bigger GDP now. Back then it was a smaller GDP. You're talking about in the Jimmy Carter, Ronald Reagan years, so to speak.
No, I'm talking about Obama. I'm talking
Obama.
Bush. I'm talking about recently.
You talking about TARP? Okay, I got you.
Yeah,
I got you.
I'm just trying to say, has inflation ever been above 3% recently? Yes. Okay. Did you raise rates then?
No.
So I'm trying to understand that they making it up as they go.
Yes. Y'all keep trying to tell y'all, man, hey, whatever a politician is telling you, do the opposite. Let me say that again for the folk in the back row. Whatever a politician tells you to do something, do the opposite. We've been doing that, guys, I've been in Mercy for 20 plus years, batting 1,000. Because they doing the opposite of what they're telling you. They really are. And Pepper, yes, you correct. I see you, Pepper, on Instagram. Yes, FDIC is $250,000. Now, that is for consumers. Now, when you go into wealth banking, it's different. Now you can actually buy bonds for $50 million within the bank, $100 million. Now you're dealing with the big boys, Wells Fargo, B of A, Citibank. It's different. So you have a regular bank teller for the FDIC, which is $250,000, and then you actually have wealth banking. So if you go to like a JP Morgan Chase, they have JP Morgan Chase Wealth Banking. That is a private banking. That's a different game there, because those are more sophisticated investors that put their money there. That makes some sense. Now, Cliff, man, hey guys, the most powerful word in business is cash flow, and we get asked this question all the time in trainings, real estate lives, you name it, when we out in the field. And this is, what are cap rates? Are cap rates important? It just so happens that one of the guys on the screen is a licensed appraiser. He can appraise SFR, single residences, and also he has the wherewithal to do commercial as well also. So Cliff.
Not yet.
Not yet.
So
not
commercial, not yet.
Okay.
But single
not
family,
yet.
yeah, we doing it.
Yeah. But the good thing about it is because he didn't have the license for commercial, my bad, positions supporting, he does actually understand how to run numbers for apartment complexes. Why? We're looking at buying a property in Jackson, Mississippi right now. Now the seller's kind of not really wise right now. Yeah, he's not wise at all, but it is what it is. So Cliff, what is a cap rate, and what arena is it important in?
Yeah, cap rate you're gonna use in commercial buildings. Basically, a cap rate is just a profitability rate, a profit rate that is generally for that area.
Yeah.
It's saying, hey, in this zip code, for example, we're seeing 8% cap rates. And a cap rate just means if you were to buy that property all cash, what will your return be?
Yeah.
8%, 7%. Usually A paper. You see, like, for example, you go. Let's go the best you can get. Let's go Manhattan.
For sure.
That's gonna be like 2% cap rate.
Yes, sir. Not no
That's
more.
that's yeah,
Not no more.
yeah, we don't know right now.
Yeah. But go ahead.
But yeah, it used to be 2% because it was gold. You're gonna
Yeah,
get that too, but you're gonna get it on billions of dollars, and
that's right.
it was safe. Then you go to Detroit,
Yeah.
where you might get a 14% cap rate,
Yeah.
where it's more risky. So
Yeah.
that's what that cap rate is.
So the higher the cap rate, the riskier the investment. The lower the cap rate, the more safer it is,
Right.
right? Now, so you answered the question: what arena cap rates are important in now, which is commercial. We're talking about apartment complexes, guys, as well as commercial properties. Okay, not just apartments, commercial as a whole. Now, Cliff, what from a apartment complex standpoint, what's a good cap rate to kind of stay in between? To kind of say it's a little riskier, but I'm aiming for this type of cap rate.
Most investors are gonna probably be 7 to 10.
Mhm.
They like those ones. Those are solid 8,
Yeah,
9% returns, and then with
yeah,
leverage, you start hitting 15, 20.
yeah. That is correct. So 7 to 8% is probably a good cap rate kind of shoot for. Now in the single family residence arena, cap rates are not really important at all. So in the SFR, know these terms. SFR, right, is single family residence. In that type of arena, cap rates mean nothing at all. I have a certain monthly cash flow that I want for said property, and I'm looking for it to get that cash flow just like that. So if it's $200 a month, I want that SFR to generate $200 a month. I don't care about the cap rate. I don't care about it. I'm looking for more of a discount on the acquisition below wholesale. So I get more of a hawkish for me to achieve my cash flow goal for a single family residence. Does that make sense, Cliff?
Right, yeah, because on a house, on commercial, a cap rate is important because
Yes,
that helps you determine the value of that property.
that is correct.
Single family residence, it's an opinion.
Yes,
An opinion
yes,
determines it.
yes. And I have sometimes
So
those opinions to suck. But go ahead.
huge difference.
Yeah,
Some people don't like playing in the opinion world of
yeah,
single family. That's where an appraiser, right? We give
yes,
our opinion of value.
yes, yeah,
Can step in, but in commercial, you still have that component, but
yeah,
it's not as strong. There's more
yeah.
weight put on the cap rates.
Exactly. And guys on Instagram, Aaron, I call him Aaron, said it is the formula for cap rate, guys, is net profit divided by debt finance. All it is. Net profit divided by debt finance. That's how you actually get the cap rate. That it's very simple to do, not hard to do at all. But you gotta know what you're doing. That is the reason why when for us, that's why we like joint venture investing because of the fact that you bring that wise counsel in because you're going into an arena that you may not know, right? Whether it be SFR or commercial or apartment complexes. Like for instance, Cliff guy was on the phone line with somebody that's we're negotiating with apartment complex guys. This guy was just I mean, he's not really wise. He wants us to close in like 2 weeks on a apartment complex. It needs to be gutted. I mean, it's in shambles. I'm
Yeah.
like, but this is not a single family residence. I don't care. Sit on it. Sit on it. He went from 150 to 130 to 120. Now he had 100,000. Again, for us, if you want to deal with it with a person that's not really being reasonable, just become a negotiating hawk. Sometimes people need to learn by their experience. So let them learn. Let them learn. You want to say anything, Cliff, man?
Yeah. I mean, we still trying to see what we can do on that deal, but you got to learn from the situation before. Already
Yeah,
had a seller.
yeah,
What
yeah.
was the problem there? And once again, we coming through same problem.
Same.
So sellers being unreasonable, and that's gonna happen. What you
All
want to
the
do is you want to stick around. We still here,
time. Hmm.
and so when the price keeps dropping, the terms keep getting better.
Hmm.
We're gonna come in and we're gonna snag it.
Yes, sir. And I love to negotiate. Yes, so specifically with people that are not really that wise in some form of fashion. It's okay. They'll learn. They'll learn. But guys, that's all we have for today. I hope we actually add some value on cap rates, guys. Cliff, you want to say anything, man, before we end the podcast? We don't.
No, man, same thing. One deal can change your situation. So figure out how to do that one time. Because I promise you, after you do one, two is way easier.
And also, guys, he's spot on. And also, guys, we're gonna do again another masterclass on distressed properties. Man, we had a good number of people in there, and we got to get into the bag. We got into the bag on that one. And so I've been getting messages, people saying, man, this was a great free training, guys. And so we're gonna do it again, guys. We got people that actually sign up for the Cash Flow Club. We're gonna let everybody know when the next Cash Flow Club meeting is going to be, guys. And we're gonna get in the bag a little bit more. All right, guys. But guys, that's all I had for today, man. Cliff, man, go love on that daughter of yours, man. I know, man, she has you wrapped around your finger, brother. I know, man. It's gonna be all right, brother. It's gonna be all right.
We're gonna make it, man. I know you know the feeling.
Man, I know, man. But guys, man, I gotta go, man. We gotta go. Thank you guys for blessing us with your time. I would know how we end it every time before you leave. And while you can, and y'all pray for Cliff. His Saints didn't do very well last night, y'all.
Oh, man.
Just pray for him. He's not a big fan of Derek Carr, so it's just be praying for him, y'all. Lift him up in prayer today. I'm praying that he's gonna need it. But guys, thanks so much for your time. God bless you. So take the picture for your mama and them. How to your partners. All right, guys. See you next week. Peace. Not gonna play. Come on. It's not.
God give thanks. Bless God give thanks. Bless God give thanks. Bless God give thanks. Big God, big grace.